Hello traders, this is Igor from FX Igor YouTube channel. Today we'll talk about quantitative trading and we'll try to answer one question. Is quant trading dying? First of all, let me define quantitative trading. Quantitative trading, also called quant trading, involves the use of computer algorithms and programs based on simple or complex mathematical models to identify and capitalize on available trading opportunities. Quant trading also involves research of work on historical data with an aim to identify profit opportunities. So, as we know, quant trading is something very familiar to most traders. A lot of traders use systems, expert advisors, various mathematical models to try to use that algorithm trading and achieve some kind of a profit. What we need to know is that the basic quant trading strategies usually include mean reversion, trend following, statistical arbitrage, algorithmic pattern recognition, behavioral bias recognition, EFT rule trading, and more. Actually, the real stuff with algorithm trading is to recognize, to find market inefficiency. And if we find market inefficiency, we can use that knowledge and try to beat the market and to trade some system in few days, few months, few years. But we need to understand that there's no system that will be excellent in every single time in history of trading. This is very important. Even the biggest quant trading companies need to update and change their quantitative trading strategies because market is changing. If everyone use some kind of strategy, you or I or we cannot earn money. And this is the very important. Now, I just want to give you a call and tell you something about Jim Simons. Jim Simons is an American mathematician and eminent fund manager. Jim Simons is the father of all quants, a pioneer of quantitative trading, a famous mathematician and fund manager, one of the first fund managers who applied a machine learning in stock price prediction, and I think it was more than 40 years ago. Jim Simons' net worth is around $23.5 billion in 2021, and he is one of the 23rd richest person in the United States, I think. So Jim Simons is, like a lot of people call him, Quant King. He has started one of the most successful popular quant funds in the world and make a self-made billionaire. And in the year 1982, he founded Renaissance Technologies. It was a private hedge fund in New York City, and Simons took retirement from the fund in the year 2009. What is the important, just to talk about this first education, Jim Simons' education. Jim Simons received a bachelor degree in mathematics from Massachusetts Institute of Technology in 1958, I think, yes. Then he received a PhD in the mathematics from the University of California, Berkeley, and he started academic career and as a scientist. But something changed in his life, and he created a fund quant trading company, and this company employs specialists and experienced persons from non-financial backgrounds. These backgrounds are physicists, mathematicians, signal processing experts, statistics specialists, and so on. So Jim Simons' hedge fund returns were 66%, I think, before charging investors fee from 39% after fees, racking up trading gains of more than 100 billion. And it was unbelievably in trading, I think, till these days. And Simons had to face a lot of difficulties in his path of invention. In the year 1985, Simons was working with James X. He's also another prize-winning mathematician. And Simmons Simmons handled so many things in his life, technically smartly as well, and really built one very strong company. What is the about Medallion Fund? From Renaissance Technologies, created this Medallion Fund and grew from 66 million to 2.4 billion between the years 1993 and 2000, and in the year 2010 it became and reached up to 10 billion. So this is the interesting thing about Simmons and his Medallion Fund. So why I'm talking about this? I'm talking about one interesting discussion between Charlie Munger and Warren Buffett about Jim Simmons. And first, I just want you in the next couple minutes to watch this conversation, and then we will just a little bit discuss about that.
What do you think of Quant's? Jim Simon's Medallion Fund has done 39% net of fees for 3 decades, which proves that it works. Will you consider hiring a Quant lieutenant in Berkshire to work alongside with Ted or Todd?
Well, I'll say no to the second part, and I'll let Charlie handle the first part.
Well, that's rather interesting. The leading quant fund did fabulously on the short-term trading. They found little algorithms that worked to make them, they had predictive value, and as long as they kept working, they just kept doing it, as long as the money kept coming in. When they got to using the same system, just to finding some little algorithm and trying to do it mechanically, for long-term stock predictions, the record was not nearly as good. And in the short-term stuff, they found that if they tried to do it too much, they destroyed their own advantage. So there was a limit on the amount they could make.
But they were very, very smart.
Yes, they got very rich.
Very smart.
And very smart and very rich, yeah. And very high grade, by the way.
Yeah.
Jim Simons.
But we're not trying to make money trading stocks. I mean,
no.
The answer, we don't think we know how to do it. I mean, it isn't. If we knew how to make a lot more money trading stocks, we'd probably be trading stocks too. But we don't know how to do it, and we really don't trust anybody else to do it for us. That's simple.
This discussion was interesting, and the first thing, in my opinion, is that Buffett and Munger were polite and humble in this discussion. First, I know that they have a lot of facts, bad things that they see in quant trading, because their trading strategy is completely different than quantitative trading. But they didn't want to tell anything bad about Jim Simmons because his trading strategy worked in the past, and he really created an enormous fortune, and they as a billionaires know to respect that. The next thing, they could criticize, but they avoided that in this discussion. They could just tell a little bit about long-term investing. Long-term investing in quantitative trading thing is a little bit hard to establish, and if you want to do long-term trading, you cannot put hundreds indicators and create some complex models, because long-term trading is more strategically, and you need to create a, like I said, long-term strategy to watch a lot of fundamental data, and the technical data is just a small part in that system. The biggest part is to understand the conditions in the market, like Soros did in the 1990s or 2010, and a lot of examples when traders realize there is a market inefficiency, and they try to use that knowledge and errors to invest in something. For example, if you are very good in trading, for example, but you realize that some company is very bad, in bad shape, but their financial statement is good, but you see that something is wrong and you find a proof for that, you can short that stock and make a lot of money on some longer period. And you use fundamental data without any technical data. And this can be really good strategy too. Munger and Buffett didn't talk a lot about this issue, but quantitative trading has one flaw. It's not dying. We know that 66% of all market use quantitative trading, and quantitative trading is very popular these days in the last 20 years. But there is one big obstacle. If you want to use quantitative trading systems, you need to understand that you need to change your system very often. You need to adapt on the market, because when market and other companies spot the same thing that you did in the past, something bad will happen and your system will not be valid anymore. And this is the biggest problem in quantitative trading. My company, we try to create a lot of quantitative trading strategies in the last, I think, 10 years. But we realize it is very, very tough. And our the biggest return that we had was around 20%. On the other side, if you just watch Warren Buffett and Charlie Munger and Hathaway, you will see that every single year they have average 20%, and really their strategy is much better and productive than our quantitative trading in our company. And we just started last couple months and last year to see some other approaches there, because tactical analysis and some systems based on the fundamental analysis are not good anymore. Nevertheless, please, you can comment and give your opinion about quantitative trading, about everything that you think. I know that a lot of people do not agree with me about some issues, about quantitative trading, maybe about some other strategies and so on. But please, you can share your opinion. I'd be glad to read that and to connect with you. So I wish you a great day, and bye-bye.